The one-off fluke from last month corrects itself as median home sold price comes down. But also in a surprising turn of event, so does the inventory. But what about the buyer's demand in relation to the inventory? Is it making a difference? Is it on the way back up? And if not, can it be on the way up, coming up very soon? Well, if you're looking to buy, sell, or invest right here in the greater Boise, Idaho area, better known as the Treasure Valley, then this is a video you will definitely not want to miss. Welcome to Mikey's monthly market updates for July of 2024, where we're going to go ahead and cover what is happening in real estate right here. Well, welcome back after the quick break, everybody, and welcome to another episode of Mikey's monthly market updates for July of 2024. For all those new to the channel, as said in the beginning of this video, this is going to go ahead and cover what is happening right here in the greater Boise, Idaho area real estate markets, better known as the Treasure Valley. And we're going to go ahead and cover and see and predict what is going to happen coming up, especially as we know that the Fed is about to cut their rates, and what is happening with the real estate markets in terms of the inventory and the overall buyer's demand. What is that looking like? What can we expect? Let's go ahead and let's dive in. And at the very end of this video, please stick around because I'm going to go ahead and cover the best strategies if you're looking to buy, sell, invest, or if you're even renting right here in the Treasure Valley. So let's go ahead, let's dive into it and take a look and see what happened in Ada County. And as we can see, boom, the median home sold price came down. I know last month I had some people out there that are saying, Mike, you're ridiculous. There's no way that the prices are on the rise. Well, they did correct back down. Remember, I said it was probably a one-off fluke because there's more higher sold properties that sold than lower home properties that sold. And we know anything about the median, it's the highest price, lowest price, and they pick the price right in the middle. So because more sold overall, which we'll get to when we get to inventory, the median adjusted and came back down. So now I've also been saying though, has the inventory spiked up to create median home sold prices start coming down? Well, we're going to get into that too and be able to monitor this coming up in the future and make predictions as to whether or not the median home sold price is going to continue to come down. So please stick around to that as we talk about some of the best strategies later on in this video. But getting back to it, we are sitting at 545, which is down, of course, from last month that we had, as we can see by the graph. And if we're kind of making some comparisons, of course, we know that prices started skyrocketing in 2022 until the market correction started late May, early June, when it's sitting at 602,250. And then it really ended itself when we got to January of 2023. And it has been on the rise ever since. So if we're looking at those numbers in particular, the $5,000 gain is just up 0.92% since the beginning of 2022. But still down 9.5% since that 602,250 in the market correction. But since 2023, when all this stopped and started going the other direction, we are up 10.55%. Markets were down 20% at one point here in Ada County, as well as Canyon County. It got interesting, but that is not the case anymore. Looking at the 6-month breakdown, we could see that. Because remember, last month, we were sitting at the 569,990. Now down to 545,000, and it's actually down below the 552,900 that we saw in May. So we are seeing the median home sold price start maybe possibly taking the other direction. And when we get to inventory coming up here next, we're going to see why, and we're going to see whether or not it's going to continue that pattern. But since last month, we are down 4.38% since then, and let's go ahead and see if it's going to continue to do so. As mentioned in some previous videos, if you do want to go ahead and click in the upper right, I'll go ahead and put it there for you so that you can see. When I was saying mid-June, boy, oh boy, was the inventory absolutely skyrocketing and outpacing the buyer's demand. But let's take a look at the inventory. Right now, we're sitting at 1,718 homes for sale, 786 sold last month. And look at the line, though. We were going up, and away to where the buyer's demand was going down, and down, just like we kind of saw in 2022 during the market correction, and we saw in 2023. But now look at the inventory line. It's starting to tip the other direction. We'll have to continue to monitor the data, but as kids are starting to go back to school, people are starting to jump out of the real estate market, and starting to really kind of settle in for Q4 holiday seasons, which is generally the slowest time of real estate, we can almost expect the inventory to start dipping the other direction. But there is one more thing popping up, and that is going to be the Fed rate cut that is supposed to be coming in September. If that happens, that's going to kind of change the ballgame. But markets have already made adjustments to anticipation of that rate cut to happen already, as we see mortgage interest rates have been on the way down. But if you're looking at the data too, mortgage applications have been on the way up. So could we have a hotter than normal Q4? We'll go ahead and discuss that. But anyway, stick by me here. Let's take a look at some of the other categories when it comes to inventory. So overall, sitting at just a little over 2 months worth of inventory. So 2.18 months worth of inventory overall in total single family homes, which is actually down from the previous month. But if we're looking at existing home inventory, we're sitting on 1,014 homes for sale, 545 sold. But again, same kind of pattern. We saw that the buyer's demand was tipping the other direction, while inventory was skyrocketing out of control over the last few months, just like 2022, 2023. And as I mentioned in the video previously, that it was kind of at almost a level of what was happening in 2022. But now look at the inventory, pink, other direction. And I do anticipate, again, as we get into further months, that we can expect inventory to be on the way down. The buyer's demand is going to be the big question. But how about new construction? What's going on over there? As we can see by new construction, sitting at 704 homes actively for sale out there. And let's go ahead and take a look at that line. You can see it's been creeping up really since about April of 2023, when things started being on the rise, and really have the builders started overbuilding here in the Treasure Valley. Honestly, I think that they have. And as we can see, the buyer's demand, especially as the solds kind of rose a little bit more, but the buyer's demand in new construction has also started to taper off, just like it did in existing homes. But now that that gap is starting to create itself, can we expect new construction to even come down in price? We could. So we'll just have to go ahead and monitor that data as we go along. But the data this month is really not showing that case, but I do anticipate it to maybe pop up. Overall, in existing homes, we're sitting at 1.86 months worth of inventory, which is down from the previous month in May. And in new construction, we're sitting at 2.92 months worth of inventory, which is actually up from the previous month. So again, new construction, kind of putting more inventory out there, and they can control their inventory basically. So it's kind of interesting to see what's going on, but I would more or less attribute it to the fact that the buyer's demand is starting to pull away, even with the concessions that they're offering. But this is something that you could use to your advantage. How about the median home sold prices in existing and new construction? Well, obviously, as we can see by this graph, we're sitting at $540,000, which is massively down from the $599,990 $990 that we had in the month earlier in existing homes. Remember I said last month, wow, that was really crazy, that it shot up from that level? Well, it's come back down to the 540,000. So I basically kind of take that as a wash. And again, because more higher price homes sold than lower price homes, and we know the median home sold price, boom, is right in the middle. So either way, we're back to a baseline, but overall, if we're taking a look at a comparison from 2022, when it's sitting at 515,100 to the 540 that we've got, we're up 4.61% since then, but still down below the market correction at 7.96% when it's sitting at 586,750. But when the market correction stopped and when it was sitting at 475 back in 2023, we can see that we have been on the rise up. And in fact, existing homes, 12.03%. That is a big jump since then. How about last month though? Last month, as I said, big whopping drop. But again, one that I totally anticipated, down 10%. And do I think that it can possibly come down even more? Yes, I do, because of where inventory is and where the buyer's demand is. But considering that the Fed is going to make that rate cut, is it going to make markets move a little bit smoother and maybe people come out of the woodworks in terms of buyers here to the Treasure Valley? I see that happening. We'll discuss that in a few. Let's take a look at new construction. Now, remember, new construction from last month was kind of interesting. It hit the other direction. Okay, because inventory was still kind of on the borderline, but the buyer's demand was still there. So I didn't really kind of anticipate that anything was really going to happen terrible amount because builders can control their own inventory. A lot of them retreated back to the pre-solds. But as we can see here, boom, it went back up the other direction. We were sitting at 525, 557 the month prior. Now we're sitting at 546, 990. which is up 3.91% since last month. But overall, if we're looking at 2022 when it's sitting at the 588,945 to what we got today, we're down 7.12% since then, and still massively down for the market correction when it was sitting at 690, down 20.72% since then. But if we're looking back to 2023, when the market correction stopped and things started going on the way up, when it's sitting at 494,900, new construction is still up 9.52%. That's a nice gain between that time. How about the health of the markets in Ada County? As the high interest rates been really kind of bleeding transactions, well, we know that year over year transactions have definitely been on the way down overall as Americans are feeling the pressure. And a lot of those Americans, too, are locked into the rates, so they don't necessarily want to move. However, that has been on the increase because of lifestyle changes, really, and people wanting to make that move, hence the spike of inventory. That's why I see that happening in existing homes. But overall, transactions are still looking good, and they're kind of more or less looking like they did in 2019 before the pandemic hit and all this craziness started to blow up. But either way, we're sitting at 34 days, which is up a tick from the 32 that we had the month prior. So may things start being a slowdown maybe a little early or maybe even a little earlier into quarter four. It very well could be. But again, I still am going to drill the point home talking about the Fed making their cuts. They've already factored in with the markets, the mortgage interest rates. If you haven't seen them, they have been on the way down than what they were. And when the Fed actually makes a cut, I don't anticipate the mortgage interest rates to drop a whole ton, but they're going to drop a little bit more because people are going to be like, wow, or the market's going to react, wow, the Fed actually made the first cut. So it's going to be an exciting moment. And the data following is going to determine whether or not the Fed will just kind of bump it right back up there, or they'll continue to take it back down in November. We'll just have to wait and see. But either way, overall, the days on market, they're looking pretty solid, especially for this time of year, looking more towards the normalcy of what we see out here in the Treasure Valley like we saw back in 2019. Well, let's take a look at cancels and expireds. This one might shock you. And why would it shock you? It's because cancels went boink, way up. And why did they go up? Well, it could be a number of factors. First off, mortgage interest rates, or the most important, most likely is because a lot of these sellers were not getting the asking price that they wanted, that they were hoping for. You know, they were hearing that, hey, prices are coming up, but price declines started happening. And why? Because inventory started superseding the buyer's demand. So it got frustrating. A lot of these people started jumping out. Sellers were saying, oh, well, why am I going to go ahead and get rid of my mortgage interest rate to go ahead and roll into a higher one if I'm going to just go ahead and start taking price cuts? That's a fair and honest question. So why move out of the lock-in? Well, according to this, they really kind of didn't. And I think that as they started seeing that, hey, my property is sitting for longer, I might have to make that price reduction. I'm just going to go ahead and take it off the market. Hence the rise in cancels. Expireds also are kind of staying a little bit even. And the reason that expires generally happen is that somebody's asking for a price, is unwilling to budge or unwilling to budge any more than what they really want for the house, and the contract expires overall. But either way, we saw a lot of people jumping out, and I think that's a good reason as to why the inventory started clicking the other direction. So overall, in terms of the median home sold price, if I'm breaking it down by category, existing homes, new construction, I do anticipate both of them to still be on the way down. And why? Because inventory still is superseding the buyer's demand. But we'll just have to go ahead and wait and see what happens when it actually comes out the Fed made the cut. When that happens, I do anticipate more Americans to really start paying attention to the real estate markets or jump back in. And jump back in because of why? Because of concessions. Builders are still offering huge concessions. And I have the feeling, considering where their inventory is at, that it's probably going to last quite some time, and especially in the holiday season as things start to soften naturally during quarter four. But if you haven't already and you want to stay in tune to what is happening with the data and get a breakdown like what you're seeing right now, hit that subscribe button below, hit the notification bell so that you're constantly tuned with my videos. I'm more than happy to educate you as the data comes out to let you know what's happening in our markets. So now that we're done with Ada County, let's go ahead and break into Canyon and see what happened over there. Well, Canyon County went the opposite direction when it came to the median home sold price. In fact, it's sitting at $424,900, which is up from the previous month, and is actually now again back at a wash between what we had back in 2022. But looking at the market correction when it's sitting at 476,500 to what we've got today, we are still down 10.82% since then. But look at the gains again since 2023 when the market correction really ended, when it's sitting at 395,445 up until what we got today. That is a 9.52% increase since then. So again, the markets have been on the rise. And if we take a look at the 6-month breakdown, we could see that jump from what happened the previous month. We were sitting at 413,990 just a month ago. Now we're up to 424,900, which is up 2.57% since then. So if we're taking a look, say back to February 2024, when it was at 409,818 up to the 424,900, we've been doing pretty good in Canyon County overall since the beginning of the year. But do I anticipate that number to continue to rise? Well, let's take a look at inventory and see what's going on with that. And as we can see, we have 1,122 homes for sale, 473 sold the month prior. But look at that pending line. Bloop, like a wet noodle, just went the other direction. But inventory also is starting to go the other direction. So do we have the same thing that happened in Ada County to where cancels started to rise? We'll have to go ahead and take a look at that here in a minute, but the gap is still there. Will inventory start crashing down now that kids are going back to school and the holiday season's coming up into Q4 too, which is the slowest time in real estate? I'm anticipating that. But do I still anticipate price reductions because of this? I do, and we've already been seeing them. So let's go ahead and break it down by category: existing homes, new construction, see how the inventory is going there, which one will probably adjust more than the other. And as I've been saying, existing home inventory absolutely skyrocketed over the last few months, sitting at 587 homes for sale, 262 that sold. But again, look at the buyer's demand. Whoop, wet noodle, just went the other direction, and that gap exists. Not at kind of the fever pitch that we saw during the market correction when inventory got way out of control and the buyer's demand really tapered off, but enough to suggest, according to the data, that we should start seeing price reductions happen in existing homes. And we already have. Taking a look at some of the data from Altus Research, let's just go ahead and kind of recap. I'm taking a look at Boise, price reductions, Star, price reductions, Nampa, price reductions, Caldwell, price reductions. And this has been happening around the Treasure Valley. Now, some of those numbers are starting to tick on the way down because mortgage interest rates have improved. And we can see on a national level, the mortgage applications are kind of rising back to what they were. So are buyers coming back in? They are. When the Fed actually makes that cut, I think that they're going to rise a little bit more. And I can anticipate the inventory to start sinking down. But right now, the inventory went blink the other direction. Not in some sort of grand scheme to where it just barreled down. But as we start getting back into Q4, as I mentioned, I can anticipate this number to come on down as we start getting into the slow season of real estate. And because of the holiday seasons, sellers just kind of don't want to be involved because they want to enjoy their holidays and not really have anything to ruin it. So existing homes, do I anticipate prices to come down in Canyon County? Yes, I do. How about new construction? Looking at this, same thing. And if we're looking all the way back to say like around April of 2023 or even June of 2023, when inventory really kind of hit its lowest spot, and you can see that the pending line, there's a lot of pendings out there as compared to where the inventory was. Now that inventory has been on the rise as the builders have really kind of overbuilt themselves, sitting at 535 active homes for sale. And again, the buyer's demand, whoop, limp noodle, even with the great concessions that you can still get out of the builders. But 211 homes sold overall, which actually puts it at 2.53 months worth of inventory, which is actually down from the previous month. And if we cycle back to existing homes, it was sitting at 2.24 months worth of inventory, which is down from the previous month too. And overall, in total single family homes in Canyon County, sitting at 2.37 months worth of inventory, which is also down. But the key is here is that inventory is surpassing the buyer's demand. And can I even anticipate prices to come down in new construction? Yes, I could. So we'll just have to go ahead and continue to monitor that data. And of course, if you want to stay in tune with all of this to see what is happening in the months to come and get this progress report for me and my opinion in terms of what to do overall in real estate, if you're looking to make a move right here, click that subscribe button below, hit the notification bell so that you're constantly in tune. But how do they do overall when it comes to the median home sold price in existing and new construction? Let's take a look at those numbers. Well, we know that existing homes made a jump, not as severe as what happened in Ada County, but Canyon County still made that jump last month. And as we can see, it corrected itself. It came back down. Again, one-off fluke. And as we see, we're sitting at 414,500, down from the 420 that we had the month before, which brings us down 1.3% since then. But overall, still since 2022, when the whole mess kind of started up until the market correction for it took hold in late May, early June, sitting at the 390 to where we're at today, we're still up 5.91% since then. But we're looking at the 425 to what we got, still down 2.47%. But overall, in existing homes, pretty much kind of caught up to what happened to existing homes during the market correction. But how about in 2023 when the market correction ended, when it was sitting at the 339 to what we got today? Up a whopping 18.21%. So again, at 20% overall that we've kind of seen dump in both counties in our market, really kind of whittled itself away. Well, how about new construction? Since we do know that inventory is starting to rise and boom, we saw that buyer's demand go the other direction, even regardless of the concessions that they're offering, we did see the median home price come up, but just a little bit. We're talking about $500. So really, I kind of just call it a negligible gain from the month that we had prior. But how about back in 2022 when it was sitting at 465 to what we got today? Well, we're down 7.75% since then. And of course, obviously down since the market correction was sitting at 549. We're down a whole whopping 21.86% since then. But again, been making those gains back since the market correction really ended. In this case, around April of 2023 in new construction, up 5.38% since then. But again, much like what was happening in Ada County, the inventory is still far surpassing the buyer's demand, and we're actually seeing the buyer's demand basically fall off in Canyon County. So I do anticipate the median home sold price in the next few months to start coming on the way down. But what is going to happen again when the Fed makes a cut to the federal funds rate? It's definitely going to draw out more buyers, which it already has since the markets have started factoring in the September rate cut. Again, if you haven't taken a look at the mortgage interest rates, then I highly recommend that you do. They have been on the way down. And even though the Fed has an 86% chance of making that rate cut in September, do I anticipate the mortgage interest rates to come crashing down to a 3 or 4%? Absolutely not. Do I anticipate it to come down a little bit more than what we got already adjusted in the markets? Yeah, I do, because I think that the markets will adjust and say, hey, the Fed actually finally did what they said what they were going to do. So we'll just have to go ahead and pay attention to that. But if you're looking to buy, sell, or invest right here in the Treasure Valley or anywhere else across the United States at that point, this is what you need to start paying attention to. And you need to start paying attention to the inflation reports, to employment reports, to manufacturing services, all of that, so that you can know how the markets are going to adjust according to the data and then be able to make the right decision about the time to buy. How about the overall health of what's happening in Canyon County when it comes to transactions and times it takes to close on a transaction, like the average days on market that we can see? Well, we can see that the average days on market actually ticked a little bit down to 44 days when it was sitting at 45. But we've seen over the last few months that it's risen a little bit. And why is that? Because it is harder for the average American to be able to afford a home. So whoever's selling, if there's enough inventory, enough competition out there, it's definitely going to rise the days on market as they have to sit for longer for that potential buyer to come through the door. And knowing where mortgage interest rates have been, well, we can understand. But although a little bit higher than what we saw in 2019, it's not the extreme swings that we saw during the pandemic when we got down to 13 days when everybody wanted to come out here. There was practically no inventory, actually down to 6 days worth of inventory. And then, of course, we know that the market correction happened when everybody really dropped out and there was plenty of inventory and it took forever getting all the way up to 83 days. So overall, are the days on market a little bit higher than what we normally see for this time of year? Yes, that's true. And do I anticipate this number to start to rise as we start swinging into quarter four when real estate starts cooling off all the way around? Yes, I do. So we'll just have to go ahead and pay attention to that data. But overall, I'll say not too shabby when it comes to the days on market, but still interesting. How about cancels and expires? Let's take a look at that. Well, looking at the cancels, again, like Ada County, except on a more severe level, boom, the cancels really hit. In fact, they've superseded levels that we haven't seen since October of 2023. That's totally crazy. We had a lot of sellers jump out. And why is that? Well, because a lot of sellers, I think, have really realized that they're locked into their rate. Price decreases started happening because there's a lot more inventory than buyers demand, but also too because of mortgage interest rates where they have been. I can anticipate that some buyers have dropped out as well. But either way, that is a huge jump in the canceled, and I think that definitely affected the inventory that is out there, starting to make it tick in the other direction. Of course, back to school, all of that is starting to pop up. That's also another factor into it, but that is an extreme increase in the cancels, which is kind of let me know out there that the sellers are nervous. So overall in Canyon County, what do I think is going to happen? Price declines in existing homes? Sure. Do I anticipate the inventory just to start diving down like a rock? No, I don't see that happening, not yet. Maybe around late September, October time, perhaps. And of course, new construction happening the same way, just not to the same degree. But either way, I anticipate new construction also come down in price. So that's things to start considering. But again, what will happen when the Fed actually does make that rate cut? It's going to definitely have the markets breathe a sigh of relief. And as that happens, I also see potential home buyers breathe a sigh of relief. Now, again, mortgage interest rates have already come down. And why have they come down? Because the markets are already anticipating that the Fed will make the first rate cut in September. In fact, at 86%. When that happens, I also anticipate inventory to come out as buyers' demand starts coming back. You can already see it by mortgage applications that have kind of been generally on the rise as of late. So either way, we'll go ahead and continue to pay attention to these numbers, see what happens overall. And if you want to stay in tune to the videos that I do come up with in future, to go ahead and stay tuned with my predictions of what's going on and what's being told by the data, click that subscribe button below, hit the notification bell so you're constantly in tune. All right, well, welcome to the big elephant section. Well, lately I've been going ahead and splintering it off into its own separate video, which again I will do here. But I want to go ahead and set the dinner table for you in terms of what it is I'm going to be talking about in the big elephant to come up next week. And that is that rate cut coming up. As I've already beat the dead horse in this video, we know that the markets have already started factoring in the rate cut that's supposed to be coming in September. And basically, the Fed has come out and admitted that that's what they plan on doing. In fact, they really should, because unemployment has been on the rise overall. And why? It's because the federal funds rate is just absolutely damaging it. Also, credit card debt is at an extreme high, as well as defaults are starting to rise. So the Fed knows that they're kind of in a predicament. But does the Fed have some room considering what happened with the PCE report, the latest one that came out, and no real spikes in unemployment there yet, also coupled with a really positive GDP? Well, from what I kind of gathered of what the Fed was saying in its last meeting, really kind of feels like the Fed feels that they have some breathing room overall to help out the employment markets just in case if there's any kind of a spike, which means that they will get a lot more aggressive with lowering the federal funds rate. But either way, I got the sense from Jerome Powell that he's kind of feeling, and the FOMC is feeling, a little bit more comfortable with the data that's been coming out. They seem to feel a lot more confident in the potential soft landing. So either way, what we're going to talk about when it comes to the big elephant is it going to be a good time to buy? And is around the September time when the Fed is going to make that cut really a good time to buy? Or maybe should you wait a little bit longer? So stick around, hit that subscribe button, hit the notification bell so that you're in tune with the video when it does come up next week. I look forward to being your guide in that. All right, so let's go ahead and let's talk about some of the best strategies if you're looking to buy at this current moment. And buyers, we generally always start with you, so let's go ahead and do it. Well, as we can see by the data, the inventory is still superseding the buyer's demand, and in fact, buyer's demand is tapering off. We've seen price reductions come into the Treasure Valley overall, even though those are starting to taper down. As we can see, the overall mortgage applications in the U.S. starting to be on the rise. So some buyers are starting to come out of the woodworks as the anticipation of the rate cut in September is going to happen. But buyers, either way, what I can tell you by taking a look at the data is that when a gap in inventory like that, when the inventory kind of bubbles itself out to the buyer's demand, we can expect prices to come down. So I still do anticipate that to happen in existing homes, as I anticipate it to happen in new construction now. And on top of that, new construction is still offering huge concessions. In fact, some of the builders out there are offering up to $45,000. That goes a long way to paying down your mortgage interest rate. And considering that some of the demand overall for this housing is starting to taper off, that's just more inventory out there and more hustle that you could possibly put either behind an existing home or new construction. So if you're in the market right now to go ahead and buy, new construction overall has seen the biggest price declines since the market correction itself. But also with the concessions, new construction is kind of, again, still taking the share of the buyers coming into the Treasure Valley because of this. And in some cases, the buyers have to resort to that because of the concessions that they're offering. Now, I'm not saying that existing homes aren't doing the same thing, but existing homes sometimes are a little bit less apt to go ahead and compete. So overall, do I think new construction is your better bet? Yes, I do. And it's because they're offering those concessions, and it's because of the undeniable fact that you're getting a brand new home. But considering that inventory went absolutely astronomical in both Ada and Canyon counties when it comes to existing homes, and the buyer's demand just totally fell off a cliff, well, I'll tell you what, the existing homes are going to come down, or they're going to get more competitive by offering concessions. So there's still going to be wins in existing homes. Do not give up on them. So either way, it is critical to have a great agent like myself in your corner to go ahead, know this information in head, and be able to get the best possible deal that you can get in the market right now. So if you wish to know more, or you'd like to go ahead and consult with me about these best strategies and how we can go ahead and win considering where the data is at right now, or even what may happen in the future, that you've maybe got some questions that you want to bounce off of me, feel free to reach out to me. My contact information can be located in the description below. But overall, the data is showing that positive things are going to be coming in terms of possibly more price reductions because of where the inventory is and the buyer's demand falling off the cliff. Plus there's concessions still out there, and plus mortgage interest rates are on the way down, and they could continue to be on the way down. So again, buyers, this is a good time to start setting the foundation, which means talking to a loan officer today, getting a pre-approval, and putting yourself in that position to be able to win in late Q4 and early Q1 as things start lightening up here in the US, and especially in the real estate market. You will want to start thinking about this before buyers start coming back. All right, sellers, it's your turn. Of course, you're probably frustrated. And as we can see by the cancels, we've seen sellers jump out. And why have they jumped out? Well, it's because you're probably taking price reductions and you don't like it and you don't have to. Maybe you realize that, hey, I don't have to let go of my house yet because my mortgage interest rate is still rocking. So I'm just going to go ahead and keep locked in like a lot of the rest of the US is doing. But what do we know by the data that we've seen? Well, one is that inventory is starting to make that turn, and more than likely the seasonal turn. So your competition is going to start jumping out. And as we've seen by some of the canceled being on the rise, we know that they're jumping out. So that helps overall, again, with the competition that is out there, which where the available buyers are here in the Treasure Valley just makes it a little bit easier for somebody to see your home. But the big giant key here is the fact that mortgage interest rates are on the way down. And again, why are they on the way down? It's because the Fed is basically almost assured that they're going to make a cut in September. They almost have to at this point, considering where the data is in employment, in manufacturing services, and key, how many people are applying for unemployment benefits. They don't want to crush the employment market. They definitely want it to cool down. And I think that they're starting to see the writing on the wall that it's cooling down, but they don't want to send it into a crash. Because if it does, then we're finally in the effects of a recession, and who knows what can happen at that point. But either way, as mortgage interest rates start coming down, which again, they already have, markets have started factoring them in. And when the Fed actually makes its first rate cut, the markets are going to start feeling really good, and mortgage interest rates should come down a little bit, tick more, but it's still going to bring buyers out of the woodworks. So if you did take your home off the market and you are dead set on moving because of lifestyle changes, etc., this could be a time to actually put your house back into the market, especially during Q4, because you get more serious buyers that come out during Q4. They don't want to be hassled by holidays either. They want to get to the point. They want to get to business. So again, usually it is a very, very effective time to be selling your house is when a lot of people say that it isn't. But if they make the rate cuts and the data still comes in good, then we can anticipate them to do it again, which is just going to bring out more buyers, which means that your home can sell, and it can sell without possible price reductions or even concessions at that point. So if you'd like to go ahead and discuss this information a lot more in detail, or you'd like me to go ahead and run a comparable market analysis so that you know where your home value is today, feel free to reach out to me. Would love to set up that appointment to come over and speak with you regarding the best strategies coming into Q4 and Q1. But also, if you are looking for your home value, just overall, according to an AVM, please go ahead and click in the description below, hit the link, type in your address, and you can go ahead and obtain that. Now, will I probably give you a call? Sure. I'll just say hello. Do you have any questions about the home price that you saw, and possibly ask you about your intentions with selling? But again, I am not a high pressure salesman. I pride myself on being that way. So more or less, I'll just be calling to say hello and touch bases with you. And if I could ever be of service to you in the future, then I look forward to being that person. But either way, sellers, again, I probably would say pump the brakes on exactly jumping out, because I do see more buyers jumping in, especially as the mortgage interest rates start to lower. And this is really going to start probably happening in Q4 and into early next year. So if you have any further questions, contact information below. Feel free to reach out to me. Look forward to hearing from you. All right, investors, it's your turn. Of course, investors, really cool times. If you're looking to see price reductions, we've already started to see them because of the inventory spike and the buyer's demand kind of falling off a cliff, more or less. So we can start seeing those prices coming on the way down. Plus, also, if you are trying to get a loan, we see the mortgage interest rates are coming down, which is also a good thing. That increases your capitalization rate overall. And capitalization rate, as we know, is absolutely key. And what's the other thing that we know? We know that since 2023 and even in 2024 here, home prices have been on the rise. And in fact, in cases to where you're earning a better percentage than what you could get out of the stock market, which is basically at a 3%. And speaking of stock market, if you want to talk about an area that is overbought, to where PE ratios are at high levels, to where you're paying more for that particular stock, well, it's here. And could there be a correction coming up in the stock market? There very well could. So if you are in the stock market and you got a good portfolio going on, I would definitely reach out to your financial advisor and start asking questions. Because in my opinion, real estate is not going to be that culprit this time around like we saw before the Great Recession. Why? Because there's no subprime loans anymore. People are actually qualified to be in their homes. So if anything's going to do it, it's going to definitely be the stock market, considering it's overbought, overpriced, is in need of a correction, and because of the federal funds rate where it is and how it has been too high. But the Fed is starting to get the picture, and they're saying, let's not try and tip this over the ledge quite yet. And considering that they had a better GDP overall, the PCEs came in good, and still there hasn't been any severe spikes in unemployment that have really kind of hit the markets as of yet, the Fed is feeling comfortable that they have some room. But back to it, and as you already know, real estate is a great way to hedge against inflation. And as we can see, we're making gains, especially here in the Treasure Valley. So if you think that real estate is for you, please feel free to reach out to me. I'd be more than happy to run capitalization rate numbers for you to let you know how things are going on overall here in the Treasure Valley. And here around the Boise metro area, still the vacancy rates are below 2%, which is really, really good. In fact, actually, the last time I checked, it was sitting at 1.86%. So if you are coming out here, you're looking for secondary homes. Of course, the more money that you do throw down, the better the capitalization rate that you get. And of course, cash is king. But either way, if you have any further questions, please feel free to look in the description below, grab my contact information, feel free to reach out to me. We'll be more than happy to go ahead and get you the investment properties that you're looking for. All right, and renters, finally, lastly, it's your turn. And we always say it every single time, you're paying 100% mortgage interest rate. Now, it's probably that way because mortgage interest rates are high. So you're like, Mike, I just really can't afford it to where it is. Because mortgage interest rates, we all know, is the killer really in the end as compared to the home price itself. I mean, if the home price were to come down $50,000, it's not going to be as much than if the house came down actual 1 or 2% in the mortgage interest rate. But hey, good news, mortgage interest rates are on the way down, and the Fed is feeling more confident in cutting the federal funds rate. Now, does the federal funds rate control mortgage interest rates directly? No, it does not. But it makes the markets feel a lot more comfortable. And when that happens, they'll go back to buying bonds. Yields will lower, MBS will start lowering their coupon rates, and mortgage interest rates will come down with it. So if the Fed goes ahead and makes that cut in September, makes the markets like, hey, you're actually doing something this time. Very, very cool. Let's see where this goes. And the data after that starts coming in again, still normal, doesn't start spiking out of control again in inflation. Then we can anticipate another cut in November, which again is even better for mortgage interest rates. So renters, now may be the time to start setting the foundation. And by setting the foundation is talking to a professional loan officer out here in the Treasure Valley or elsewhere that services Idaho. Obtaining a pre-approval absolutely costs you nothing, except for maybe 5 points on your credit score or maybe even 6 that replenishes after 6 months. But at least lets you know your buying power, or at least talking to them might even let you know their buying power, but through a pre-qualification. But either way, you're starting to set that foundation to put yourself in the position. And right now, as I said, even back in the buyer section, buyers, they're getting themselves in really good position right now, and buyers are starting to come out of the woodworks. If a lot of buyers start coming out of the woodworks and inventory starts decreasing, which it typically does during Q4, and the buyer's demand starts superseding the inventory, what can we anticipate? Home prices to rise. I know, it's not the coolest of all things that you want to hear, but that is just how supply and demand goes. So if you are looking to start setting that foundation, feel free to reach out to me. You can get my contact information in the description below, and I'd be more than happy to go ahead and get you in contact with an awesome loan officer out here in the Treasure Valley so that you can start setting that foundation and setting yourself up to win. Well, again, thank you so much for taking the time out of your day to watch these incredibly long videos. All of my market updates are, so please get used to that if you subscribe and hit the notification bell. But either way, I do invite you to stick around for these videos because I do come up with really good content that lets you know things that could affect the real estate markets in the future. I do travel the Treasure Valley, give you overviews on the cities, all that kind of stuff so that you know what's going on before you decide to make that move, say from out of state, or if you're jumping from city to city and you really just kind of don't know and you want to know a little bit more. I like to be able to put that information out there. So again, please hit that subscribe button below, hit the notification bell so that you're constantly in tune with the videos that I do come out with. And of course, if you do know somebody that could benefit from this information, please share it with them. It'd be really, really appreciated. At least that way they'll be in the know. Also, if you know of somebody that's maybe looking to move from out of state right here to the Treasure Valley or the greater Boise, Idaho area, I do have a free relocation guide located right in the description below. So click on the link, answer a few questions, and it's all yours. But also, I leave out that invitation just to give me a call. I'm a walking dictionary of the Treasure Valley, so please feel free to give me a call. I'm more than happy to answer any direct questions that you have. But before you go, of course, I challenge and say out there, if you feel that any of this data is going to be different somehow, or you think that the markets are going to completely fall apart, all that stuff, please leave me that comment. I'd love to definitely hear your thoughts on what you think is going to happen. And before you go, please give me a thumbs up. Let me know that I did a good job. It also helps out the YouTube algorithm and helps promote these videos moving forward. So that way I can educate more people about the Treasure Valley. But again, I thank you very much for taking the time out of your day. God bless. And I look forward to the day that I call you my neighbor.